Welcome to our USD/CAD analysis report covering the period of September 15th to 20th, 2025. In this presentation, we'll examine the recent price action, technical indicators, and fundamental factors affecting the USD/CAD currency pair. We'll also provide short-term and mid-term outlooks to help guide your trading decisions. Let's dive into the analysis. Let's begin with an overview of the current market situation for USD/CAD. As of September 20th, the pair is trading at 1.3796, having established a weekly range between 1.3725 and 1.3889. Looking at the broader picture, the 52-week range shows movement between 1.3538 and 1.4791, indicating significant volatility over the past year. The key support level to watch is at 1.3725, while resistance sits at 1.3889. These levels have been tested multiple times and are proving to be significant barriers for price action. The pair has been trading in a consolidative pattern following recent central bank decisions, with both the Bank of Canada and the Federal Reserve cutting rates by 0.25% in their latest meetings. This has established a trading range between 1.37 and 1.39, which traders should monitor closely for potential breakouts. From a technical perspective, USD/CAD is showing mixed signals across different timeframes. The hourly chart displays an upside bias, while the 6-hour and daily timeframes maintain a neutral stance. The weekly chart also indicates a neutral bias, suggesting that the pair is at a critical juncture. The price action shows that USD/CAD drew support from the 1.3720/5 zone and rebounded but lost momentum after hitting 1.3824. This price behavior is part of a larger corrective pattern since reaching the medium-term top at 1.4791. Key technical levels to monitor include the critical support at 1.3725, where a break would turn the outlook bearish, and resistance at 1.3889, where a break would suggest a resumption of the corrective rebound. The RSI reading of 50.07 confirms the neutral momentum in the market. Price is currently trading near the 50-day simple moving average, further supporting the neutral technical outlook. Two major central bank decisions have significantly influenced USD/CAD's recent price action. The Bank of Canada cut its policy rate by 0.25% to 2.5%, citing concerns about weakening growth, rising unemployment at 7.1%, and easing inflation. This decision has been negative for the Canadian dollar, suggesting room for further rate cuts. Meanwhile, the Federal Reserve also cut rates by 0.25%, but the market viewed this as less dovish than feared, providing some support for the US dollar. Economic data releases have shown a stark contrast between the two economies. Canadian GDP contracted by 1.5% in Q2, with exports declining by a significant 27%. In contrast, US data has been more resilient, with moderate growth in retail sales helping to stabilize the USD/CAD pair. Analyzing recent price movements, USD/CAD has established a trading range between 1.3725 and 1.3889. The pair found strong support at the 1.3720/5 zone and rebounded, but lost momentum after hitting 1.3824. The daily chart shows that the pair has been in a consolidation phase, with price action reflecting market indecision. The hourly time frame shows some bullish momentum, while longer time frames maintain a neutral stance. This suggests short-term buying pressure within a broader consolidation pattern. Traders should watch for a breakout from the current range to determine the next directional move for USD/CAD. Key levels to monitor include immediate resistance at 1.3889 and strong support at 1.3725. The price behavior during this period suggests that traders are awaiting fresh catalysts before committing to a directional move. For the short-term outlook over the next 1 to 2 weeks, we expect USD/CAD to continue consolidating within the 1.3725 to 1.3889 range as the market digests recent central bank decisions and looks for fresh catalysts. In a bullish scenario, A break above 1.3889 resistance would suggest the corrective rebound from 1.3538 is resuming, with potential targets at 1.3923 and eventually 1.4014. Conversely, in a bearish scenario, a decisive break below 1.3725 would indicate the corrective rebound has completed, turning the near-term outlook bearish with a potential test of 1.3538. Looking at the midterm outlook over the next 1 to 3 months, the range expands to 1.3538 to 1.4014 with a neutral to bearish bias. The bigger picture suggests further decline is expected as long as the 1.4014 cluster resistance holds. Our risk assessment identifies several factors that could push USD/CAD higher or lower. Upside risks that could drive USD/CAD higher include further deterioration in Canadian economic data, which has a high probability and high impact with a risk score of 4.2. A more hawkish than expected Fed stance presents a medium probability but high impact risk with a score of 3.8. Additionally, a decline in oil prices would negatively affect the Canadian dollar with a medium probability and medium impact risk score of 3.2. On the downside, risks that could push USD/CAD lower include a renewed wave of US dollar weakness with a medium probability and high impact risk score of 3.5. A stronger than expected Canadian economic recovery, though considered low probability, would have a high impact with a risk score of 2.8. Finally, an increase in oil prices would strengthen the Canadian dollar, presenting a medium probability and medium impact risk with a score of 3.0. Traders should monitor these risk factors closely as they could significantly influence the direction of USD/CAD in the coming weeks. Thank you for watching our USD/CAD analysis. Remember that Forex trading involves significant risk, and this analysis should be considered as one input in your trading decisions rather than a definitive forecast.